Hey, Dwight Miller, CashflowInvestor.com. Wanted to do this little video on seller financing. We have a property whose after repair value is 149. We spent 7,500 on buying costs, title, insurance, transfer tax, etc. 8,900 on selling costs. We put 30,000 in repairs, and we bought it for 50,000. So we've got $96,000 in it. So we find a buyer who agrees to give us a full price offer for 149,000. They give us 15,000 down, and we're going to carry a note for $134,000. 20 years at 10%, the monthly payment is going to be $1,293.13. So far so good. And by the way, this mortgage will be just like a regular mortgage. It'll be um, on the title. It'll be recorded with the mortgage. So it's a regular mortgage. The mortgage holder is required to hold insurance, etc. You're named additional insured. So here's how the money works out for you. Here you go. So let's say you had your own costs. So you borrowed the $94,000 or whatever it is. All right, so you borrowed the $96,000 total, and you borrowed it at 8% for 15 years. So here's your payment per month. Here's your monthly cash flow, and here's your yearly cash flow. Not a bad little cash flow considering. But let's say you decide, you know what, I want to get my money. I just want to get out of the deal. So here's your note amount. A note buyer agrees to buy your note at a 15% discount, so it's $20,100. So they're going to give you $113,900. Now, the beauty of this transaction is, while it seems like it could happen over time, it actually can happen the same day that you sell the house. So you could get this $113,000 the same day. It's called a simultaneous closing. So here's your profits. You got $15,000 from the down payment. You got $113,000 from the note buyer. So you received $128,000. You had holding costs of $96,000, and your total profit is $32,460. So by holding the note, you made some money, flipped this guy, and because you offered seller financing, you were able to sell it quickly because seller financing doesn't require banks, etc. It only requires the same due diligence that the bank does. So you'd have to do a credit report on the buyer. Actually, they could provide you with a credit report, and if you wanted to make sure that you had an offer to buy the note, you could get a quote for the note, and we can help you get that quote. So that's seller financing in a nutshell. Hope that helped. Once again, I'm Dwight Miller, CashflowInvestor.com, and talk to you soon.